Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the markets seem a little bit starved of oxygen. And what I'm talking about is really clear sentiment from some of the central banks. And they are overreacting to what has already been sort of forecast. Now, the US dollar firm on recovery, risk sentiment, prospects of easier overseas rates, right? Now, we did see the Swiss National Bank cut rates. And also the Bank of England are very close. They were saying that a rate cut was a fine line. Now, to me, this is like a bit of a reshuffle of the cards, basically. Like the US, the numbers are weaker, okay? The jobless claims were weaker. There was some other housing numbers which were very weak in the US. So it's not all roses in the US. You see the dollar index sort of just tweaking to the top side and the euro just rolling over. Now, the Euro's got this geopolitical issue, right? And this could escalate if France, the far right come in, take over government in France. It could lead to changes across the rest of Europe, that sort of snowball effect. And now the Bank of England left rates unchanged, but sort of did signal that, they're getting closer to cutting rates, and they've got to be, right? The Swiss, it was sort of 67% factored in that they would cut rates. And you see the extent of that move there. Man, it's not epic, but it is something, right? Just goes to show that the traders are still jumping on anything they can because we're not getting that clear trends. We're not getting clear signals from the central banks. And traders, as I said, it feels like they're starved of oxygen because you're looking for these moves, but they're sporadic and they're not really convincing. So they're sort of short-term, if anything. Okay, so just going back to looking at the rest of the pairs, like sterling Aussie to me is still the best trading option, right? You see the Aussie dollar here didn't go down as far as some of these other pairs, and that's primarily because the RBA signaled higher rates. Right now, I've been sort of looking to get set up towards 91, the figure. I actually had an order at 87, which I cancelled because we had the Bank of England coming out. Sure as hell, the thing sort of tops out just below that, and it's slowly dribbling to the downside, right? But that's something still on my radar. If we have a look at the daily charts across the majors, right? The dollar index still within recent ranges. Dollar Swiss is still going down despite that rate cut, right? Dollar yen's going up. Dollar CAD, well, it was going up, now trading sideways, but in the middle of the range. And Euro, this is why Euro is a bit of a focal point because it's trying to go lower here, but it's not convincing because the US numbers are weaker, right? So as much as Euro wants to go down, so does the dollar. Now, sterling, middle of the range, Aussie at the top end of the range, and Kiwi sort of drifting back to the middle. So as you can see on the daily charts, if you were just looking at these, there's not much to get excited about except for probably Euro, right? And or dollar Swiss, the way it's moving down. So, and the rest of these other ones would be on watch. Dollar CAD, Aussie, sterling. You're sort of, okay, look, we're watching these ones. But if I come back to the hourly charts, and this is why it's a great idea to look at both perspectives, this is where the noise is. And you can get like distracted or hypnotized by the short-term charts where, you know what, this sort of flag formation here on Euro where you got resistance sort of narrowing, support narrowing. Usually it's a flush out both sides of the market and it doesn't go anywhere. We're starting to see sterling roll over. Okay, I think that's just a flush out of positions. Aussie is just moving with that little short dollar move. I tell you, we're one US economic data release away from seeing all these moves reverse. That's how fickle the market is at the moment. Dollar CAD, it's taken all week, right? And with a nice false break on the Monday, which would have caught out a few traders, now it's just slowly drifting down. This is like a 30-point move, which has taken 4 or 5 days. Oil, well, it's just sitting here at 81 bucks. It hasn't really moved, but dollar CAD has finally drifted lower. The carry trade, US dollar versus the yen rates, well, that's a no-brainer. As you can see too, it's smart. The BOJ aren't saying too much. Now, technically, you can see that move here on dollar Swiss, aggressive. That resistance line is now acting as support, as you can clearly see. But we'll have to sort of wait and see what's going on. The move on dollar Swiss now lines up with what's happening on the euro, right? That's back to sort of normal market conditions, but it's yet to be seen whether the Swiss just rolls back over. So hourly charts, as I said, there's short-term trades here and there's short-term flush out of positions. Now, don't get too caught up on the hype around the some of the news services here, because it's like they're exaggerating. They want people to read their crap, right? So talking about easier rates across the board. Australia's not cutting. Yeah, the UK are leading into it, but so is the data. It's like these are obvious things that are happening. And the most obvious one is the fact that the US numbers are actually starting to roll over as well. So anyway, so it's tricky sort of conditions at the moment. Just coming out of that North American session, if we just have a look at the where the global markets are, let me just get my pen back up. The like equity futures, okay, slightly up. The NASDAQ had a bit of a shocker of a day overall, but the futures are sort of starting to angle higher. Not any real clear sentiment just at the moment. Now, the ranges have just been reset in New York, okay, at 5 p.m. New York. The yields just a fraction higher in the US, just a fraction, right? Not anything to write home about, but that sort of keeps the dollar on that sort of slightly upward projection, but nothing too major to go by there. Now, if I have a look at the major releases coming out today, there's judo numbers out of Australia are nothing. You got the inflation numbers out of Japan. I wouldn't be worrying about those. The key number I'd sort of have a look at, and this could be the real catalyst for a move on Friday. And don't forget, Friday can be a little bit skittish. It's the day where traders who haven't made any money or have lost money try and get their cash back before the close of the week. Now, retail sales figures, okay, the data in the UK has been dreadful. I would be expecting that dreadful tone to stay in place. And that's one of the leading things that the Bank of England is sort of saying. It's a fine line between we're sort of ready to cut rates. Something like this could be the catalyst for the move if we do get weakness, okay? Definitely, okay, weaker than the minimum aspect of the range. The range here is quite massive, to be honest. Minus 2.1 to 1.9, expecting minus 0.8 ex-fuel, and minus 0.9 just the retail sales number themselves. So that's probably the key to the next major move. Keep an eye on some of these flash PMI numbers out of the Eurozone as well. But we might see sterling do something special. If we see a big correction up here, which I just can't see it on sterling, then you'll see sterling sort of just climb out of the gutter, probably for the trading day, but not overall. Now, you come back down and you know what? There's some manufacturing numbers there out of the UK as well. Then you come down into the North American session. You've got Canadian retail sales figures. A rate cut's already been factored in for Canada. So weaker retail sales figures here goes with that sort of trend. Okay. Stronger numbers goes with a weaker dollar CAD. That's for sure, which is what is actually happening at the moment. And then you got some S&P flash numbers there, existing home sales. The home sales in the US are starting to really crap out, right? And that is an alarm bell. If I just sort of scroll up, give you a look at yesterday's numbers there. Okay, here we go. Housing numbers, 1.27, but housing starts off minus 5.5. It was previously up 5.7%. And the jobless claims still weaker than the forecast. So people are still filing for unemployment benefits, and that could escalate as well. And the Philly Fed Business Index, which hasn't been mentioned anywhere, is weaker, much weaker than the prior numbers, right? The minimum maximum range there, pretty extensive, but more to the weaker side. So to me, we are starting to see the US numbers sort of drop, but we need that one killer punch, and the dollar will be sort of rolling over. And once again, we'll have short-term trading opportunities because a lot of the central banks are starting to talk about it or cutting rates. It'll include the Fed shortly as well, and you're going to see a lot of jumping around. But the key to it is just don't get too frustrated with the lack of the trends. Okay, as I said, when it comes down to looking for trending opportunities or good trading opportunities, look for the interest rate differentials, right? And that's why I'm looking at very closely sterling Aussie. makes a lot of sense. RBA on holds, Bank of England talking about cutting rates. It's still not too late to get in. All we need is one little sporadic event to see a little pop up to get us in at a better level, and then we see it continue lower. So you're looking for that sort of opportunity on a number of these instruments, right? Because when it comes down to, like, this is like old school trading, the interest rate differentials, right? This is where the action is. So you can keep an eye on the various central banks, see who's cutting, right, and who's not. And like the Bank of Canada, most probable action, cut. That's only 58%. I thought it was much higher than that, but that's sort of been factored into the market. This makes the Bank of Canada next rate decision hugely lively. When it's a line ball decision, like 50% or 60-40, that's going to be a wild opportunity there. But you can sort of keep a track of that as we go forward, because the interest rate differential is where the money goes, right? Higher interest rates gets the cash. And this is a classic case of what's happening on dollar yen, higher rates in the US, lower rates in Japan, and you get a higher dollar yen on just on the carry trade itself. All right, guys, so a little bit in that. Just remain patient. As I said, they've got short-term trading opportunities. The dollar, well, it sort of has gone up through the North America session. You might see it roll over during the Asia session, and then we focus on those UK retail sales figures. That's where the focus will be in the market. All right, guys, have a good one. All the best. Cheerio.